zero tolerance policy because, first of all, the flight crew is on the airplane for passenger safety, and you don't want the flight attendants or the pilots from their safety duties. If I'm the captain of your airplane, you don't want me distracted by something that's going on in the back of the airplane. And the policy is all around behavior. And we have seen over the last year a significant decline in these incidents, but they continue to occur at too high of a rate. So we will be keeping the zero tolerance policy in place. And I know the Secretary has said that everything is on the table in terms of broader measures such as a no-fly list. But again, so that's under consideration. No decisions have been made, though.
Steve, I'm just curious. You and I have talked about this off camera a couple of times. How surprised are you at some of these reports and some of the conduct that you've seen during your tenure as the head of the FAA?
Well, I was very surprised when we started to see this significant uptick. Again, the actions that we have taken, and we've done a lot. We've done memes, we've done service messages. I've even been on TMZ to make sure that we're reaching the public and making sure that they understand that that this kind of behavior is not acceptable on airplanes, and it's got to stop. I will say that the measures that we have taken so far have significantly driven down the rates, but they are still above historic averages. And I think as we move into a more normal posture past the pandemic, hopefully in the next few weeks, that will return to more of a sense of normalcy on commercial aircraft.
Steve, so much of your administration has dealt with the work that the FAA has done with Boeing, a lot of it with the 737 MAX, taking a look at what happened as the MAX was going through certification. And now you're dealing with the Boeing leadership in terms of the protocols that they must put in place before they can start delivering the 787 Dreamliners. What's your sense in terms of how close Boeing is to having protocols in place where you guys say to them, yeah, you're good to go, and then Boeing says, okay, we're ready to resume deliveries?
Well, first of all, there are no safety issues with the 787. What we're talking about are production quality issues, some quality escapes that Boeing had committed to correct and to put a process in place to correct. So we are working with them on what that solution looks like, and they're making good progress on that point. And as you know, we have also said once deliveries do resume, we will be doing the airworthiness tickets ourselves. We will be doing inspection. That'll give us a good check and balance to make sure that their processes are under control, production quality issues in the future, which is what Boeing wants as well.
As you know, we've followed a number of your hearings on Capitol Hill, a lot of them focused on the progress that the FAA has made in terms of revamping the process for certification of new aircraft. Will that change, do you believe, over the next 10 years? Do you think that what started with your administration will be extended and that we'll see a revamp of sorts continue in terms of how new aircraft are certified in the future?
Well, the short answer is yes. This is, as I've said many times, Phil, safety really is a journey. There is no final destination. We always need to get better. And so that we've made significant improvements, significant systemic changes, both within what we do and also at what the manufacturers are doing in terms of what they're bringing forward to us. So we have to engage early with the manufacturers as they bring designs forward. And then as we have new aircraft that we're going to certify, we need to be very rigorous in our oversight, make sure that we are having good visibility into their safety management processes so that we can address issues and capture any potential safety issues before they reach the design approval stage.
Steve, I know you're tracking the investigation into the 737-800 crash, the China Eastern crash in Southeast China. We still don't have a lot of answers to what happened there. And there's already some chatter, especially online, of people saying, are we truly going to get a full accounting of what happened? Will the Chinese authorities give us a full accounting? How confident are you that we will get that a true, transparent review of what actually happened with that crash?
Well, I'm confident that we'll get to the root cause of the crash, but it requires us to not engage in speculation. I'm certainly not going to speculate about the cause. And the Chinese Civil Aviation Authority has contacted the NTSB, and the NTSB is the accredited representative for the United States as the state of design of this aircraft. I would also that the 737-800 and the NG fleet, which the 800 is part, is one of the safest aircraft ever produced in commercial operation, and it's one of the most widely used aircraft around the world. So by all indications, this was an airworthy aircraft, but we'll have to go where the facts take us in terms of getting to the root cause as the investigation proceeds.
Steve, thank you for joining us this morning. It's been a pleasure having you on our air as you were the administrator for the FAA. I know you're excited to get back to your family down in Georgia. Enjoy some time there. Stop roaming the halls of Capitol Hill and having reporters like me chase you down the hallway after hearings and other meetings. Steve Dixon, administrator for the FAA, joining us this morning. Guys, I'll send it back to you.
Great, Phil. Thank you. Appreciate that. And Administrator Dixon as well. Coming up, don't miss an exclusive interview with Treasury Secretary Janet Yellen. We had to break. Here's a quick check on oil prices this morning, 110. And a reminder, you can always watch us live on the go on the CNBC app. We're coming right back.
Let's take a look at some stocks to watch this morning. First up, we've got Tilray. Shares of the cannabis producer popping in extended trading after jumping 21% in the regular session yesterday. Pot stocks were higher across the board after the House of Representatives announced that it would be voting next week on a bill to federally legalize marijuana. An earlier measure cleared the House 2 years ago, but then it stalled in the Senate, which at that point was controlled by the Republicans. The Chinese electric vehicle maker NIO reporting better than expected fourth quarter sales. However, deliveries missed the forecast. NIO, which began trading in Hong Kong earlier this month, said that it expects to deliver about 25,000 vehicles this quarter. That's also short of what the street was expecting, and that stock right now down by about 4.25%. And then there's Netflix buying yet another video game company as it looks to try and create a new revenue stream. It's acquiring Boss Fight Entertainment for an undisclosed amount. Boss Fight was founded by former Zynga employees. It's known for its mobile game Dungeon Boss for Android and iOS devices. Andrew, you're back.
I'm back and at the Treasury building. Coming up after the break, our exclusive interview with Treasury Secretary Janet Yellen, live from Washington, D.C. As we head to a break, quick check on futures this morning. Stay tuned. You're watching Squawk Box right here on CNBC.
A developing story this morning. The United States and the EU striking a deal to send more natural gas to Europe this year as the bloc looks to cut its reliance on Russia. Damien Corvalin is the head of energy research for Goldman Sachs. And Damien, we kind of knew that this was going to be coming, but what does it mean in the broader sense in terms of what's going to happen in the market and the prices?
I think the key really is the timeline. So in the short run, the US is already exporting as much LNG as it can. So the key is making sure that what can go to Europe will go to Europe. And there's some flex for the summer that can help about a quarter of Russian imports during the summer months. The issue, though, as I stated, is we're running at capacity. So real meaningful help down the line requires more investment in more LNG projects. That's a 2.5 to 3 year horizon, which needs contracts and commitments. So, this is the first step. redirecting flows, the meaningful reduction in Russian flows will take several years to play out from the U.S. perspective.
It's already been pointed out this morning that by doing this, Biden is already going to be kind of violating the longer-term goals that he's laid out in terms of what he wants to see in cleaner energy and getting away from fossil fuels. Are there other changes that are likely to come in the administration in terms of more than just signaling and saying these things? Because I think that's what it would take to convince private industry to go ahead and invest in some of these projects and spend the money that you're talking about.
So the White House statement is twofold, actually, this morning. It's, getting more gas to Europe, and the second half is about consuming less gas. Look, I think what's key here is from an energy security and availability today, gas is essential. Renewables are great, but to do them at scale, it takes time and it requires what we don't have, which is utility scale storage, hydrogen. So, natural gas and the US LNG exports have a key role to play for the rest of this decade in enabling the decarbonization as well as providing the energy we consume today. I think that's really the core of how one should think about shale's contribution here. It's what we need, it's short cycle. And by the way, 35% of global power generation is still coal. Displacing that with gas is already a huge improvement on the carbon side.
What companies are going to be involved in this? I know that this is something that Vicki Hollub, the CEO of Occidental, has talked an awful lot about, the changes she'd like to see coming from the administration and other places so they can do this. But what companies would be front and center when you start thinking about being able to get this LNG to Europe?
So, we don't cover company per se, but clearly what you need is more gas out of the ground. So the US E&Ps have a key role to play. You need more pipes to get it to the coast and more LNG terminals. So it's really the whole value chain of shale here that benefits from this incremental support for LNG.
Hey, Damien, the higher the price of legacy energy, the higher the price, the closer renewables get to being economically competitive. But it's going to cost the world more, obviously, to provide energy. How much more do you think? Where do you think, and how do you measure it per kilowatt hour? So I don't know how you measure it, but where does natural gas, where does oil, where does coal, what prices get them to the point where renewables are completely economically competitive with fossil fuels?
Yeah, so I think there are several moving parts here. First of all, renewables clearly are where we need to go. But it takes time to scale, as I mentioned. So we still need those legacy hydrocarbons. Now, that's a challenge for producers, right? It's the concept of investment under uncertainty. Do you really need that gas 10 years from now? And that's where the policy side comes in. You need to create a visible pathway to that transition where you're not underinvesting in today's resources. If you did underinvest, we're testing that right now across gas, coal, and oil. We have to test demand destruction. So that's a real challenge, right? Underinvesting in what we need now is significantly higher prices for energy today. So that's the policy solver ultimately, is creating that more realistic path than just stating, let's just all go to renewables tomorrow. Now, what's the price where you get demand destruction? I mean, we're starting to test it in oil. Our forecast for 135 Brent prices later this year is effectively that. Supply can't respond quickly enough with this latest Russia shock. And so we need to start to reduce consumption. But you can see that's highly regressive, right? That's higher gasoline prices. So, we kind of know what price range we're at. You look at European gas prices, they're already reducing industrial demand. So, this is where we start to see that. We should see supply respond. The economics are getting there. It's just creating that visibility. That's why this announcement today between Europe and the US is important. Right. If it delivers.
Well, Damien, I guess my point is it's going to be expensive. It's going to be expensive. It's going to be regressive. You're sure that it's worth it? We can't mitigate the effects of CO2 10, 15, 20 years down the road. We can't have steps where there's not going to be technology that mitigates it. We should go ahead and just spend, should we spend we should spend maybe $40 trillion on the Green New Deal. I mean, there's something between what we're going to do and what the left and climate real lobbyists would like to do. We're never going to get to the $40 trillion. But are you sure it's money well spent and it's not something we can handle down the road instead of having this very aggressive system that we're going to be putting up with for the next 10, 15, 20 years? The entire planet, and lesser developed countries, it's going to affect them even more.
I think the key really here is just a timeline, right? Again, you can scale those low carbon solutions, and you probably want to include carbon capture, for example, on top of renewables. So that's clearly what you need to support now. But just the scale required, the time it will take to scale, means you can't stop investing in today. So that's why, again, it has to be a twofold approach. Invest in what we need today and make sure we're ramping up investment elsewhere. This is a significant challenge for the global economy. But again, we know the resources that we need. We know what we can use and consume today, and we know when we need to invest. It's just about making that investment commitment today.
Hey, Damien, people keep wondering why gasoline prices at the pump here in America are so much higher. Even when oil comes down, the prices don't come down as quickly. I didn't know until yesterday that there are a lot of refineries, I think refineries in places like North Dakota and California, that are being repurposed to do things like renewable fuels and sustainable jet fuel. That's a big deal, and those are things that are going to take a very long time. Is there any way to undo any of that?
I mean, those are relatively small in scale. I think what's important to understand about gasoline prices is, it's a global market. So first of all, we're not based off WTI in Cushing, it's really off Brent. By the way, we also import gasoline from Europe. So the very high natural gas prices in Europe make gasoline even more expensive. And you can see how in the end, you pinpoint gasoline, but really the energy challenge is global, right? We have record high coal prices that forces more demand for gas. You run out of gas, you try to burn oil for power generation. Oil is more expensive, which makes coal expensive, right? This is just one energy market that across all those three key components has seen underinvestment. So, renewable diesel is just a very, very small component of what has been now a multi-year underinvestment in the energy we consume. I think that's the real challenge here.
Yeah, globalization, a big question in this and so many other industries too. Damien, thank you for your time today. It's good to see you.
As we've been talking about all morning, the big news this morning, President Biden announcing a joint task force to bolster energy security for Ukraine and the European Union. The primary goal to diversify supply of LNG and curb Europe's reliance on Russia for its energy. Joining us right now in an exclusive interview this morning is Treasury Secretary Janet Yellen. Madam Secretary, thank you for joining us.
My pleasure. Thanks for the invitation.
So as we were just discussing, energy is the big topic. And I want to understand from you how you reconcile the administration's climate goals right now with what clearly is a shift in posture around energy and fossil fuels.
Well, the climate goals are very important, and there's no change in that. If anything, seeing what's happening because of our dependence on global markets for oil and to some extent natural gas just emphasizes the importance of making the transition that will shield us from events in Russia, global developments that can negatively impact oil markets. We really want to move and see the need, all of us, the United States and our allies, to move quickly to renewables that will give us a safer and more independent energy picture.
But clearly in the short term, that's not going to work, and clearly there's going to be an effort to push for more fossil fuels. Jamie Dimon, JP Morgan CEO, telling the administration that they need to create a Marshall Plan around fossil fuels and energy. What do you think of that?
Well, I don't really want to get into what happened in a private meeting, but I certainly agree that we are looking very carefully at the global energy situation. We have banned Russian oil imports from the United States, but our dependence isn't very high. We recognize how important Russian oil and natural gas imports are for our European partners, and they recognize and we recognize how important it is to reduce that dependence to the maximum extent possible in the short run, which goes to this morning's announcement by President Biden about our enhanced cooperation on LNG. But it's not possible to completely eliminate that dependence, certainly this year.
Do you think the investor class has to rethink its position on fossil fuels? And I say that only because there has been a real shift towards ESG over the past several years, and whether that idea needs to be suspended to some degree relative to what's happening now and the national security issues that it is either creating or has created?
I don't think that the ESG movement and the emphasis on climate change is creating the problems that we have. If anything, the problem is that we haven't moved as rapidly as we should have. Europe and the United States would be less exposed to the pressures that this conflict is putting on our energy markets if we had greater reliance on renewables. So that remains firmly appropriate as medium and longer term goal. But in the short run, our ability to punish Russia for really the horrific acts that they're committing in Ukraine and to degrade their power and influence in the world economy, it would be greater if there were less dependence on Russian oil.
But in the immediate term,
looking for substitutes.
One of the things that's happening in the United States, for example, is the SEC just put out a notice about proposals around climate disclosure.
Yes.
Do you think some of those policies shift in terms of either timing or otherwise as a result of what we're seeing right now?
So I was heartened to see the SEC proposal. It's something that the Financial Stability Oversight Council has focused on, our partners around the world and the investing community really want information that can guide their investments. You see increasing number of American investors, including banks, that have commitments to net zero by 2050, and they need the kind of information that's consistent and transparent to let them make investment decisions. Those goals haven't changed. The need for globally comparable information remains a high priority, and I think the SEC has crafted a very good proposal. I was really very pleased to see them put it out.
Let me ask you a question about globalization. Larry Fink this week said globalization may be over, and that this war between Russia and Ukraine has become a flashpoint, and that American companies doing business in certain countries, potentially even China, and I'm thinking about big companies like Apple that are doing business there, clearly China appears to be an ally of Russia, may have to rethink where they're doing business. What do you tell American business leaders this morning who are thinking about where their supply chains come from and the politics of where those supply chains come from?
Well, we do have to, and this is not just because of the Russia-Ukraine situation, but this became evident in the pandemic that maybe American businesses have focused on efficiency and organizing supply chains in ways that lower cost but impair resilience. And resilience of supply chains is a high priority for the administration. And so to an extent, that will lead to some reallocation of where production.
But how much of that is about
place.
resilience, which was an issue we talked about in the context of the pandemic, versus politics and national security?
Well, national security is also important, and we recognize the need to consider having an appropriate trade policy that protects our national security interests. But when you say this may be the end of globalization or something that extreme, I really have to push back on that because we're deeply involved in the global economy. I expect that to remain. It is something that has brought benefits to the United States and many countries around the world. And we certainly don't want to go to a system in which the United States loses those benefits. So there may be some rethinking to promote national security.
You've put a number of sanctions, obviously, on Russia, but would you consider sanctions on China as an ally of Russia at this point?
So I don't think that that's necessary or appropriate at this point. We, as senior administration officials, are talking privately and quietly with China to make sure that they understand our position. We would be very concerned if they were to supply weapons to Russia or to try to evade the sanctions that we've put in place on the Russian financial system and the central bank. We don't see that happening at this point, and it's really up to China to make sure that they understand the complex situation that they face.
Becky has a question for you. Bex?
Thanks, Andrew. It's very good to see you, Secretary Yellen. Just a question about how the economy is faring right now, because the markets have been kind of roaring higher on some of the economy, and then there are these questions about inflation and what the Fed does next. You see the tax receipts coming in every day. Is there any sign of weakness anywhere in this economy?
I honestly don't see it. You know, we have an immensely strong job market. Growth over the last year has been extraordinary. Job creation remains very high. When you look at the balance sheet of the typical American family, it is in very good shape. Consumer spending is strong, and tax revenues have frankly been surprising to the upside, you know, helping us in a plan to reduce deficits. We'll be releasing the budget shortly. So I see a lot of strength in the American economy. Inflation is high, and you know, the Fed certainly has a role to play there.
What do you think about the global economy more broadly and where we fit in it? This is the Dallas Fed president earlier this week. Quote, if the bulk of Russian energy exports is off the market for the remainder of 2022, a global economic downturn seems unavoidable. I would imagine if that's unavoidable, it's unavoidable for us as well.
So we are seeing pressure on commodity prices because of the Russia-Ukraine situation. And it's importantly oil and natural gas, but also other commodities. And I am concerned about spillovers to countries, for example, that are heavily dependent on wheat. Wheat prices have been soaring. And I think it will likely reduce the prospects for global growth over the next year. But we've got a good, strong U.S. economy. We're a net exporter of oil. Oil prices obviously impose significant burdens on American families, but it's also likely to, on balance, be offset in the impact on spending by faster drilling expenditures.
How high do you think oil prices can get at the pump?
Listen, there's a lot of uncertainty about it. They're not as high in real terms as they were earlier in this century, and it's conceivable that they could move higher. But we're doing everything that we can, working with our partners to assure adequate global supplies, to make sure that Europe is well supplied with oil and natural gas, and to protect American consumers to the extent possible. But when the 11th largest economy, faces sanctions because of their horrific behavior in Ukraine, there just are going to be spillovers that are unavoidable.
President Biden, by the way, said last night overnight, I should say, about sanctions, that they would not prevent the continued invasion. Do you think, Secretary Mnuchin, your predecessor, said that he would have moved faster on sanctions. Do you think that sanctions could have had a greater effect had they been put in place earlier?
Well, we hope that they would have a deterrent effect, and certainly prior to the invasion, President Biden made abundantly clear to President Putin that if he invaded Ukraine, that there would be very significant consequences, and hope that that might affect his calculus. Clearly it didn't, but I do think there's some chance that it will affect his calculations going forward. And the pain that Russia's experiencing, I think, well exceeds anything that they expected. And I think a realist looking at Russia's long-term economic prospects, the prospects for its defense sector, and all of its competitive export activities would have to see that the export controls and financial controls are going to degrade economic performance in Russia for a long time.
How much do you think the sanctions on the oligarchs influence Putin's behavior?
Well, I'm not a political expert on Russia, but, I think the oligarchs probably have some influence on the thinking of President Putin, and they have provided resources that enable Putin to carry out a war like this. So influencing, the sanctions that we've put on them, I think, are appropriate and hopefully will matter. But as you know, we announced new sanctions yesterday, I guess it was, that will impact Russia's defense sector, make it very difficult for it to import parts and supplies that it needs to be competitive. So eroding Russia's power to have a defense sector, a high technology sector that's competitive over time. Advanced semiconductors, access to those have been cut off by export controls.
One of the oligarchs that wasn't sanctioned in the same way as many of the others was Abramovich. And the view was that was done because he was going to act as a mediator. Russia now says he's no longer acting as a mediator. First of all, can you speak to his role as a mediator?
No, I honestly can't. I have heard that reported as well. We are continuing to sanction individuals as well as looking at broader sanctions on sectors, and I would hold open the possibility that certainly not take off the table the possibility that he or other individuals could face sanctions in the future.
More sanctions now that he may not be acting as a mediator? Meaning, does his position as a mediator or not change?
I'm not going to comment on the calculus about exactly what determines if he is or isn't sanctioned. I just say that it remains a possibility.
Joe's got a question for you, Madam Secretary.
Madam Secretary, you were very positive on the U.S. economy, looking for even any weak spot. So we saw Chair Powell go a quarter point and then come back and say maybe 50 basis points is going to be necessary. A lot of people think that the Fed is behind the eight ball right now and being able to actually raise rates to the extent that they need to. Would you have gone 50 right away? And do you think 50, since you think the economy is so strong and rates are so low, do you think that we'll go 50 at some point in the future and should have done it already?
So, that used to be my job, and it's what I spent a lot of time.
You were so good at it. Yeah, what would you be doing? What would you be doing right now?
Much appreciated. My job in my current position is to emphasize how much I respect the independence of the Fed.
But you could be such a great help. I'm sure he'd love some. Do you give him advice? Maybe not on Squawk Box. Would you give him advice? Maybe whisper something in his ear, and what would that be?
Well, he and I meet regularly, as all Fed chairs and Treasury secretaries have for as long as I've been in this business, and we have a very good and strong relationship.
Okay.
But it's up to the Fed to make these decisions, and we'll respect the decisions they make.
All right.
I think we have another question from Becky.
I do. Thank you. Madam Secretary, the Fed, as you mentioned, is going to do its own thing and decide how much to raise rates. But it does sound like those rates may raise more rapidly, at least than the market was anticipating. The CBO is estimating that the government's going to be paying something like $545 billion a year just in interest payments based on where interest rates stand and where they're predicting they're going to stand over the next few years. If that goes up by even something like 50 basis points, I think that amount jumps by about $94 billion a year. What do you do? Because this is where it kind of lands back in your lap. How do you budget for this? Where are you expecting to see interest rates in terms of what you might be able to fit in the budget on what the government will pay in its interest payments?
Well, Becky, if you look at last year's budget, what you'll see is a projection that over time interest rates would rise back to more normal levels. I mean, obviously, interest rates have been at rock bottom levels below most estimates of neutral for a very long time. And where there may be differences in the details, CBO and the administration in its budget projected rising interest rates. One way, a way I think is quite good to measure the burden of the debt is by looking at net real interest payments on the outstanding debt. And over the last couple of years, that burden has actually been negative. And as interest rates rise back to more normal levels, and you can see this in the budget we put out last year, we project somewhat higher, but still historically low burden of the debt in terms of net interest payments. So this is not unexpected. It's something that's incorporated in our projections.
Two quick final questions for you. One, I couldn't get through an interview without asking about crypto, but in particular, Russia just said that they would accept Bitcoin as a payment for their energy resources. What does that say to you about where we are in the crypto conversation?
Well, crypto is obviously grown by leaps and bounds, and it's now playing a significant role, not really so much in transactions,
right,
but in investment decisions of lots of Americans. And the president just issued a couple of weeks ago an executive order tasking us and other agencies with thinking about the regulation of crypto.
Does that mean you're less skeptical about it than in previous? I mean, we've been talking about it together for a long time now, and I think you've had a skepticism about crypto technology.
I have a little bit of skepticism because there are, I think, valid concerns around it. Some have to do with financial stability, consumer investor protection, use for illicit transactions and other things.
Right.
On the other hand, there are benefits from crypto, and we recognize that innovation in the payment system can be a healthy thing. We would like to come out eventually with recommendations that will create a regulatory environment in which healthy innovation
and
can
then finally,
thrive.
cyber. It's the one thing that everybody's worried about, especially given what's happening in Russia right now.
Yes.
Is there an industry or industries that you're particularly concerned about?
Well, we are worried about the energy sector and have also focused, especially in this building, on the financial sector. We have a robust program to work with financial firms at Treasury to monitor and quickly inform financial firms about threats that are detected or firms experience.
How confident are you then that we're...
Cyber is a real risk, and we recognize that we have vulnerabilities, and we're doing everything we can to be prepared to deal with that and to up our defenses. But this is a significant risk.
It's a longer conversation. We appreciate you being with us this morning, Madam Secretary.
Pleasure.
Thank you so very, very much. Nice to see you in person.
Thanks, Andrew.
Thank
nice
you.
to see you as well.
Appreciate
Thank
it.
you.
Joe, back to you.
Could you hear that? Maybe a beginning of a stacker, a Bitcoin stacker? I just reading between the lines, Andrew. Didn't that sound a little bit? Huh? No, that's what I just heard. That maybe no.
I don't know about that.
Well, more than before.
Maybe I'll try to talk to her offline.
More than before.
More than
no
before.
Doubt.
I think
more than before.
Yes,
maybe
there's
not
an
a
evolution in
stacker.
thinking. My thinking has been an evolution as well.
Oh no. All right, coming up, much more on the markets and our reaction to our exclusive interview with Janet Yellen. As we head to break, here's what's in the headlines at this hour. European lawmakers have reached an agreement on a new digital competition law aimed at curbing the power of big tech companies like Apple and Google. It would still need approval, though, from each EU country itself to take effect. And California Governor Gavin Newsom has proposed an $11 billion relief package aimed at relieving the burden of high gasoline prices. I almost said we're living, which we're doing now from back in the 70s. It would include direct payments to Californians of $400 per vehicle. The average price of gasoline, get this, $5.88 in California, $5.88 a gallon. Fill up an SUV out there, and you need a C note. Stay tuned. You're watching Squawk Box on CNBC.
Still to come, we've got some top stocks on the move ahead of the Friday morning opening bell. And we'll be getting veteran investor Peter Krause's take on our big interview with Treasury Secretary Janet Yellen. Stay tuned. You're watching Squawk Box, and this is CNBC. Welcome back to Squawk Box, everybody. This is CNBC, and let's talk about some of the stories that investors are likely to be focusing on today. First up, Apple wants a court ruling that it largely won last year over App Store policies to stand. This is part of the legal battle with Fortnite maker Epic Games. Epic appealed last year's ruling that went against its claims that Apple's payment rules were for apps were anti-competitive. Yesterday, Apple told appellate judges that the decision was sound and that Epic also has not put forward any reasonable alternatives to its App Store policies. Pandemic mainstay Instacart coming back down to earth. The grocery delivery company cutting its own, or citing market turbulence as it slashed its valuation by almost 40% to about $24 billion. In a funding round a year ago, the company was valued at almost $40 billion. And Bed Bath & Beyond has reached a settlement with investor Ryan Cohen, the company issuing a statement just a short time ago. As part of that pact, 3 new directors will be appointed to Bed Bath's board. Cohen's RC Ventures holds a nearly 10% stake in the retailer, and as you can see, that stock is up by about 10% today. Joe?
Just over an hour back before the opening bell on Wall Street, and Dom Chu joins us now with a look at some of the morning's top pre-market movers. He's got all 4 of the first Elite 8, I know, in his bracket, and you'll probably get all 4 of the other ones tonight, right, Dom?
Listen, for the.
You got anyone?
For the
Do you
TV,
have anyone?
no, for the
Do you have
TV
anyone?
No,
Do you have one of the Elite 8?
It doesn't matter to me right now because in the bracket that you're talking about, which is the TV newser one, right?
Yeah.
I have picked Kentucky to win the whole thing.
I know.
So,
I know. You didn't make it one game.
No.
You didn't make it one.
No.
Well, you know what? You can watch. Maybe you're hoping for the Peacocks, since that is our corporate logo, and
they're just down the road from us here.
They are.
They're just down. Well, I mean,
Jersey
they're
City.
Across the river from you, and they're down the road from me because I'm still on
Jersey
this end
City.
of New Jersey. Right. Exactly.
Right. They have a prep school team that my son's basketball team played. St. Peter Prep, too.
They might have to be like the Cinderella team that we all root for.
Cinderella, incredible.
Yes, exactly, just like that. But anyway, all right. So let me get through these movers here. First of all, for this Friday, because we do have some stuff on the move. First of all, what you're watching right now is a move in cybersecurity in one of the big names that's been a juggernaut over the last couple of years. That's been Fortinet. It's down about 2% right now, due in large part to a downgrade by analysts over at Bank of America. They now say it's a neutral. They said they had it as a buy before. They cut the target price to $355. It was $385. They say a lot of the good news, the good catalyst, the returns are already baked into the stock at this point. And you can kind of see over the last several months here, it's been a fairly range-bound trade. So Fortinet down weaker here a little bit because of those B of A analyst calls down to neutral. Also watching what's happening with the pre-market and some of the big fertilizer names out there, because the war in Ukraine and Russia continues to put pressure on fertilizer prices. It's a big producer, Russia is, of fertilizer. And if there's supply concerns there, the fertilizer from other makers in the world will go up in price. And so CF Industries up fractionally, again, up huge over the course of this conflict. And the Mosaic companies up fractionally as well. So keep an eye on those fertilizer makers and ag names as well. And then a check on the most popular tickers. Search on our website, cnbc.com, from yesterday's full session. The 10-year yield remains number 1. WTI crude remains in the mix as well, but it drops a little bit on the list. And for the first time in a while, the MOEX composite in Russia, because it actually started trading yesterday and it's still trading today after about nearly a month of being closed. NVIDIA, Tesla, Apple among the top tickers there. And as always, Andrew, the rest of the top 10 highlights from the top 50 are on my Twitter feed at The Domino. Andrew, I will send things back over to you in Washington, D.C.
At The Domino. Thank you, Dom. Appreciate it. When we come back on the other side of this break, an interview that goes right to the heart of energy independence and the climate conversation we've been having ever since Russia invaded Ukraine. We're going to be joined by the city treasurer of Chicago, the city council there, voting to ban investments in fossil fuel companies. You don't want to miss this conversation. Squawk Box coming right back.
Just as Russia's war in Ukraine is causing a surge in global energy prices, Chicago City Council voted this week to ban city investments in fossil fuel companies. It's part of an effort to help fight climate change. The Windy City is the latest to join the divestment train. New York, New Orleans, Houston, Los Angeles, and other cities have made similar moves. And stocks that Chicago sold include ExxonMobil, Occidental Petroleum, Chevron, and Berkshire Hathaway. And joining us now to talk about all this is Melissa Conyers-Irvin, City Treasurer of Chicago, and it's great to have you on, Madam Treasurer. Is that good for you, Melissa?
That sounds great to me, Joe. Good morning.
Good morning. If everybody did now, I understand Chicago's making a statement and putting a line in the sand. Am I wrong to say that you don't want everybody, big money everywhere, to do this all at once right now because of what the ramifications would be, especially in light of, we know that Europe moved too quickly probably towards renewables, and a cascade of events, maybe not all due to that, but it does give Vladimir Putin a lot of leverage to have that energy card held over their head. Do you want everyone to do this all at once so we don't have any more fossil fuels, or is Chicago just making a statement for itself?
Well, I'll tell you, first of all, some people believe that we've waited too long to act as a society to move away from a reliance on fossil fuels and carbon emitting processes. So this is a very necessary step. I think that's a very interesting question at a time such as this, but this is the time for Chicago to stand up to say that we are going to fight climate change. And as you mentioned, with the crisis in Ukraine, it seems as if the oil industry is again in the middle of chaos. So I definitely think the time is now.
The one rationale that I've seen put forward is that we know that renewables at this point need a lot. They need subsidies. I mean, oil companies there's been subsidies for fossil fuels as well. I understand that, but to be completely competitive right now, you either need to bring down the costs of renewables, or you need competing investments in fossil fuels, those prices to go up. Are you okay with consumers paying 2 or 3 times more for gasoline, 2 or 3 times more for natural gas, or for whatever we use at this point to supply the grid? Because renewables can't do it yet. So we, for at least another decade, we're going to need that. Is that, are you all right with that economic offset, that we're going to pay 3 times as much, but at least we'll move towards renewables more quickly?
Joe, I'm a lifelong Chicagoan. I am born and raised in an underserved community. You ask me, am I okay with residents paying more? Absolutely not. We don't want to pay more. We also want to make certain that our future is protected for our kids. I'm also a mother of a very young child. And when we look at fossil fuels and what fossil fuels is doing to our environment, it is something that has to be addressed and really has to be addressed now in order to fight climate change. And when we think about the oil and gas industry, even like in the beginning of the pandemic, the prices, the stock prices were in the tanks. And now with everything that's going on in Ukraine, we're certainly seeing a difference. But again, oil is always in the middle of, not always, but oil is again in the middle of chaos. And so that is something that we want to make certain that we are paying attention to. And we want to make certain that we stay focused on the future of our children. And oil and gas is very volatile. It's up and down. So I understand the question because it definitely is appropriate for right now. But what we have to do is make certain that when we're investing taxpayer dollars, that we are investing taxpayer dollars with the values of Chicagoans. And certainly that's important to make certain that we provide a clean environment for the future of our children.
Let me approach it this way, Madam Treasurer. I like that. Madam Treasurer, if natural gas at this point is the cleanest alternative to coal or other things that, I mean, renewables aren't ready yet to power the grid. We won't have any power like around the world. If we were just solar and if it was just wind, we wouldn't be doing it. So if natural gas is the cleanest alternative we have in terms of emissions, and it can power the grid so people have heat and power and everything else, you do need to drill and produce natural gas as an energy company. So you do need financing to be able to produce the natural gas, which would bridge the transition to what you're hoping for in the future. Would you think, does that make sense, that we need to keep producing a lot of natural gas to keep the lights on in this country?
So no matter how we look at it, I'm still going to go back to the point that I believe in, and I hear what you're saying, and that's why I think that these conversations are healthy. Of course, right now in the situation that we're in, we know that we do need natural gas. That is no doubt about it. But certainly, I believe the steps that Chicago is making, and thinking about Chicago being the second largest municipality behind New York, that has stood up to say that we are divesting from fossil fuel companies. If we don't do this, then who will? And when we stand up to say that we're going to divest from fossil fuel companies, what happens is that these companies acknowledge that, hey, we have to make a change. And so if we do not do this, then we will not be able to initiate the change. And I think also moving away from fossil fuels is just smart. It's just smart investing. And so I think that this is absolutely necessary. When we look at, even in early 2020, there were reports of about or over 100 oil and gas companies declaring bankruptcy in North America. And so it's a very volatile industry. And we want to make certain that this industry understands and acknowledges the value of residents. And residents want a clean environment. And I believe that we can have both.
But in the meantime, between now and when we can go to more renewables, you're making this statement. Chicago can't cut off the fossil fuel industry, obviously. Is that, I mean, do you, in the back of your mind, know that that's not going to happen, and therefore Chicago is able to make this kind of a symbolic move to try to force people to talk about these things, and you hope other people continue to finance the fossil fuel industries because we need that energy for the next 10 years? Or do you really want to just cut them? Do you wish we just cut them off completely, because people might not have any heat in their homes during the winter then?
So let me tell you, it took me 18 months as treasurer for the city of Chicago to divest in all of the fossil fuel investments that we had. And so that's certainly a process. It's not something that happens overnight. It took me 18 months. So I believe that if all municipalities, if we started in the process in order to send the right message that we will not accept this climate crisis, and that we are going to work to make certain that we protect the environment, the future environment of our children, I think that this is absolutely necessary. Over the past 18 months, as treasurer, I have divested $70 million in fossil fuels. That was necessary in order to send the message. Chicago is the third largest municipality in the country, second largest behind New York, and so many other municipalities have stood up to say that they will divest from fossil fuels. So many others, Houston, Phoenix, Boston, and many others even around the world have stood up to say that message. So Chicago, as of today, in the Chicago Treasurer's Office, I have divested over the past 18 months in all fossil fuel companies. Again, because it is the right thing to do, because it is smart investing, and because it protects the future of our children.
Well, listen, have you, we know what you've divested. Are there things that you've invested in that you think will bridge us to where we're going to be in the future with renewables? Or is wind something you've invested in, or solar or hydrogen, or have you done any active things that way instead of just divesting fossil fuels?
So our goal with the city's investments as treasurer is to really maximize the risk-adjusted returns with a close eye on the city's liquidity needs and the preservation of capital. And so we can best achieve those goals by constructing a diversified, high quality liquid portfolio of fixed income securities. And so we obviously put a high degree of importance on free trade fundamental analysis. And part of that analysis is to incorporate an ESG overlay. So we're selecting companies that are outperforming in areas to the environment. That's very important. So certainly renewables will fall into that category. We also give strong consideration to bonds whose use of proceeds involve green and sustainable projects.
Yeah. How about some crypto? How about a little crypto? Throw in a little crypto. 10%? You got any Bitcoin yet, Melissa, or no?
That's still something. That is something that we are certainly looking into. It is a diversified portfolio, but as of now.
All right. Well, we appreciate having you on. Yeah, I love I mean, it is the second city, but we do love it. We do love the Windy City.
Yes, we do. Very healthy conversation. Thank you so much.
You're very welcome. Melissa Conyers-Irvin, City Treasurer of Chicago. Thanks. Bye.
Thanks, Joe. When we come back, hacking charges against Russian government officials. This allegedly involves oil and gas firms, utilities, and a nuclear power plant. We will bring you all the details. Squawk Box will be right back. Welcome back, everybody. We have news of an alleged hacking campaign by Russians against critical infrastructure. Eamon Javers joins us right now. Eamon, what are the details?
Good morning, Becky. The Department of Justice said they unsealed the indictments of 4 Russian hackers as a warning to the U.S. energy sector of what the Russians have been up to in recent years. But you can also see this as a warning to Russian intelligence that the U.S. government knows far more than they might think about exactly who has been carrying out this campaign. Now, there were 2 indictments unsealed yesterday by the DOJ, charging a total of 4 Russian hackers, 1 who was associated with the Russian Ministry of Defense, and 3 men associated with something called Center 16. That's a hacking unit of the FSB, Russian intelligence agency. The hacking took place between 2012 and 2018, but the U.S. says the indictments show the kind of hacking groundwork that President Biden warned about this week. In one dramatic instance, the U.S. government says they compromised the business network, but not the operating computers of the Wolf Creek Nuclear Operating Corporation in Burlington, Kansas. In another case, Russian hackers allegedly hacked into a foreign refinery, causing a fault that led to 2 emergency shutdowns there. The U.S. says the Russians had the ability to cause damage, injury, and economic harm. They also allegedly researched similar refineries inside the United States. Now, much of this was done with sophisticated malware programs, but some of the research here was surprisingly simple. In one case, officials said the Russians were able to determine which systems U.S. refineries were running just by surfing the employment postings for those refineries and looking at the technical requirements for the new hires over there. Back to you, Becky.
Wow. It's pretty stunning. And by the way, this was all before we were really at serious odds with Russia. Eamon, thank you. I'm sure you'll be talking about this more later today, and it is something we will pay attention to. Let's get down to the New York Stock Exchange and check in with Jim Cramer. Jim, I'm not sure if you were listening to Andrew's interview earlier with Secretary Yellen. Just wondered if there were any points that kind of jumped out at you as being the most important.
Well, look, I think on this natural gas thing, we have to figure out how to make them independent, and it involves every aspect of our government. I think she should captain it, because I just think people don't understand that there's going to have to be a lot of moving around, a lot of international work to get that natural gas to them. She's incredibly savvy, knows her way around the world. We don't really have anybody else in the government that could do it. So just a very smart person, and have to hope that there's a recognition that you can get that stuff there, but we really cannot send it all we can't send everything to Asia and to Europe, and it has to be done quickly, it has to be done by 2024. I think there's possibility, but it's going to be very hard.
Yeah, I agree with you. I hate to do this, but because we had so much time with the Secretary, we're short on time today. We will be watching for you in just a few minutes, Jim. It's good to see you this morning. Squawk Box will be right back.
Welcome back to Squawk Box. It is just over 30 minutes till the opening bell on Wall Street. We're in the cash room of the Treasury building here in Washington, D.C. after our interview with Janet Yellen, the Treasury Secretary. Here to talk markets, Peter Krause, Aperture Investors Chairman and CEO, of course, also former Chairman and CEO of Alliance Bernstein. Peter, it's great to see you this morning.
Good to see you, Andrew.
What you made of the Treasury Secretary's remarks in terms of inflation and in terms of our economy here in the United States. She seemed to have a very positive view of it. However, we've clearly heard from others, and I'm thinking of Carl Icahn earlier this week, who thinks we're going to go into recession. Dallas Fed, who thinks that the global economy is going to have a tough time, and I think imagines that spills over here. Where are you?
Yeah, I'm closer to Yellen than I am to Carl Icahn or the Dallas Fed. I think that we have had an oil shock. We are in the middle of a war. Equity markets have already reacted, so have bond markets. In the United States, we have very strong employment. We have consistently higher earnings. We see projected earnings for the first quarter for the S&P actually higher. It's hard to argue that we're going to have a recession in the United States. It's not hard to argue, and I think we should expect a growth slowdown in the U.S., and the market's already priced that in. Europe's a little bit trickier because the price spike in Europe for energy is much higher, and it's probably going to last longer. But there again, it's probably not a recession because there's going to be substantial fiscal spending in Europe that Europe hasn't seen in many years, maybe a long time. And so you're going to see spending on energy security. You're going to see spending on cybersecurity. You're going to see spending on defense. And that's going to be stimulating.
Right.
So I think that Peter, we're going to see inflation, but I don't think we're going to see a recession, Andrew.
But, Peter, it sounds like you're suggesting this is already baked into the cake. This is in the markets. And does that suggest that there's a buying opportunity here? Or do you think that there's additional costs that haven't been put into that baked cake, if you will? By the way, one of those costs may be what Larry Fink has been talking about this week, which is the idea that if you believe that globalization is either over or teetering, there are going to be a lot of companies that do business and have supply chains in other countries that may have to move them. That's going to be an additional cost that I don't think is in the numbers right now.
Yeah, to your first question, is the market ready to be bought? The answer is, if I had a certain amount of money to put in the market, I actually would commit some cash today. I wouldn't commit at all because there's a chance that the market actually sees its lows and tests those one more time. But I don't think we're at the beginning of this. I think that the market has already reacted. As it relates to the globalization question, I think it's too early to tell. That's a good question. It's a good point that Larry raises. But there are things that Western economies could do. For example, they could actually combine together and create a free trade environment. We've been debating free trade for over 10 years. We haven't ever done anything about it. Well, there could be a free trade deal between the United States and Europe and the United States and the Asian democracies, which actually would accelerate trade and might, in fact, continue to accelerate the globalization trend. So I don't think we know the answer to that question yet, Andrew.
Peter, to the extent that there are viewers thinking to themselves, okay, Peter's willing to commit some money right now, where do you commit that money?
Well, you know, I think, look, picking sectors and picking companies is obviously challenging. I would be buying broad indices, quite frankly, if I didn't allocate money to an active manager. If I allocated money to an active manager, I would say, obviously, the manager is going to figure that out. But picking stocks is going to be challenging if you're not in the markets all the time.
But well, would you be buying, by the way, would you buy an energy index or commodity index right now? Or you're saying, are you buying just the NASDAQ because you think that the growth names that have come down, that there's opportunity there? Are you buying the Russell? I mean, when you say indexes, what are we talking about?
I actually think the Russell's an interesting place to go. You know, the Russell was down 23% peak to trough, and it's recovered somewhat. But I think the Russell's a good place to go. I think the S&P's probably a good place to go. Yes, I think you could also argue that growth stocks have been beaten up, but there's still plenty of growth stocks that deserve to get beaten up. And I think if you're buying the index, you're not going to get the benefit of where the good or the better growth stocks are going to go.
Right. I don't think you're buying a SPAC index. Peter, we're going to have to leave the conversation there. We're up against a hard break at the end of the program.
That's probably something I'm going to miss on.
I imagine. Looking forward to seeing you in person. Thanks so much.
Yeah.
Appreciate it. Joe?
Same here. Bye-bye.
Oh, I wanted to see his watch band because it always matches his tie. Final check now on the markets. We're up just under 100 points now on the Dow, and a lot of interesting things happening across the asset spectrum, especially crypto back. You know, I thought that was interesting, Andrew, what Secretary Yellen said.
Yep.
A bit of a shift in tone.
I think it's an
on
evolution.
crypto.
We've seen it.
Yep. All right. It's Friday.
Here we are in the
It
cash
really
room. Is this going to become the
basketball
Bitcoin room?
Hoops.
You think?
Yeah, hoops. We'll know the Elite Eight at the end of the day. Make sure you join us next week. Squawk on the Street's up right now.
Good Friday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer. David Faber is the morning off. Bulls trying to put some polish on what could be the first back-to-back weekly gains of the year for the S&P. President heads to Poland after striking that deal to supply the EU with natural gas. Energy and metals are mostly lower. Our roadmap begins with the Treasury Secretary speaking on CNBC moments ago about the strength of the U.S. economy and the importance of energy independence. As we said, the EU targeting big tech as well, announcing new rules aimed at curbing their dominance. And B of A highlighting some picks, why they love mangoes.
Yes, I love that.
We'll start with the markets, though, and the two-week surge for stocks here, Jim, would be the first, as we said, back-to-back of the year for the S&P. First for NAS since November.
Yes, I mean, I keep going back to my friend Larry Williams, the great historian, who said that 21 times out of 21 times since 1929, when you have that 50% retracement, takes it out, then boom, it goes up. And then you kind of basically discover why it went up, as opposed to being able to say, hey, it's going up because. I think there are a lot of people who continually say, how can you buy any stock ahead of what's going on in Ukraine? And the answer is that during this period, the hedge funds are buying a lot. They're big institutions that are on the sideline, but I think that they've come back to FANG in a very big way, and to Mango. Mango, by the way, is an acronym for semiconductor stocks. And, you know, I saw great notes today about Facebook, great notes about Amazon, fabulous notes about Apple.
Disney.
You know, yeah, Disney. I mean, you know, so it's big cap. I know there was a discussion just now on Squawk about what kinds of stocks to buy, but I can tell you that you'll have these moves like the Amazon gang is out today saying buy Amazon. The Tesla gang is out by
Barclays on Tesla.
Yeah, and you know, you read them and you say, well, that's pretty compelling, but then you think, well, they've been up day after day after day. Let's give me something new, and that's why I thought Mango was so exciting.
So for those who are wondering what we're talking about, B of A today, by the way, the stocks, chips above the 50 and the 200 DMA for the first time since January. Yesterday, you saw that action. So Mango's an acronym for Marvell, Broadcom, AMD, ADI, and then NVIDIA, Global Foundries, and on.
Global Foundries shouldn't be in there because Global Foundries, that's a cyclical company. Marvell is the one to focus on. That's Matt Murphy, one of the hardest charging guys in the world. He's put together an amazing company, $70 billion. I think it's going to $100 billion. And Bank of America agrees with me. They are, the one thing that was wrong about this, they talk about how they're competing against much larger peers, NVIDIA, Intel, and Broadcom. They're not competing against NVIDIA, they're partners with NVIDIA. So that is, I would say, ill-advised comparison. However, they do want to destroy Intel, and they don't have to worry about it because Intel's busy destroying itself. Pat Gelsinger is now talking about spending, the CEO of Intel, spending money, spending all the cash flow, which to me is ill-advised, even reckless. But you know, Pat is on, he's messianic about his view of Intel and America, and all I can say is circa 92, it would have been real smart.
Right, but the streets already, they well understand what cash flow will be like for the next 3 years. Right?
Yes, they do, but I think it's going to be worse.
Worse than that?
I mean, he's going to just spend a fortune on these foundries. And the Ohio concept, you know, talk about greenfield, there's like nothing there. Cows, corn, those are both better investments than semis.
Is it any wonder then why he's pushing for subsidies, maybe harder, arguably, than any other CEO?
He should keep pushing. He should keep pushing.
Because he's going to need it?
Yeah, he's every dime. He's being supplanted. They're being supplanted everywhere. And Marvell is doing a lot of the supplanting. So I think that people have to start looking at Marvell and start knowing Matt Murphy, because this is the one to watch.
We're going to circle back to semis, obviously, before the open here. But let's touch on this deal with the U.S. and the EU to supply some LNG. We're looking at 15 billion cubic meters by the end of the year. Sounds like a lot. Russia supplies about 10 times that every year. Yeah,
I mean, it's going to be really difficult. And the reason why it's difficult is because you're going to have to move a lot of nat gas around. It's actually possible if you do it during the off season. There's periods where that typically we don't ship a lot. The problem is that Germany doesn't have the infrastructure. The rest of Europe might. You can take it through Belgium, take it through Poland, but they do not have the infrastructure. But they might in 2 years. So it's not pie in the sky. But you're going to have to take a lot of companies that might have wanted to send it somewhere else and send it to Europe. I think that you'd also have to make it so FERC stops being so difficult. I understand the people who want this is more stuff. Thank you to Rusty Brazil, who's putting out the best blogs on this. But it's absolutely possible. But everything has to go right. And you have to move. You have to make it so that natural gas that might have been headed to Korea goes to Europe. But I do think that in the end, you need Australia, you need Qatar, you need U.S. They all have to participate. And U.S. is producing a huge amount of natural gas. So let's cut to the chase. You can own Cheniere. You can own Coterra, which has a lot of natural gas. That's that merger where you got Cimarex, but more importantly, Cabot, which had a huge amount of natural gas. And then let's just roll the dice here. Tellurian. Yep, little $5. That's remember that's Sharif Suki who built Cheniere before he was deposed by Carl Icahn. He made a lot of money.
Yes.
He was the highest paid CEO in
Sure,
the country.
no violins. But when Jake Sullivan's on the tape this morning saying that they've identified the targets that they can help meet this target, you think that's not out of line?
No, it's not. But everything has to go their way. And one of the things that they really have to do is they've got to make it so the oil companies feel more secure to be able to put more pipe down. But the two rulings for FERC have made it so that you've got this thing, you've got this justice, environmental justice that's never been used before. So I will know if the president's serious. If he comes back, he goes, we have to change what FERC did. That's what, I know that's very granular, but the FERC rules have made it so that a lot of companies that wanted to build pipelines for natural gas, including Alpine High natural gas, that take that gas to where you could make it into LNG, are all gun shy because the president's people are so bad about exactly what he's selling over there.
Yeah. Natgas, by the way, best week since February. Actually, best week since January, highest since February. But things that we don't normally see this time of year is what we call the shoulder period.
Yes, and that's what's interesting is that the way you would get that natural gas over there is now. You would, when we don't need it, you would send it there because we're running full tilt, and we can put up more. We are putting up more plants, but the big stumbling block is the president, and yet it's the president that's making all the.
Right.
He really has to. He has to focus. The president has to focus. He's not focused.
Well, he's got some balls in the air. He's going to Poland, as we said today, to meet with President Duda. He'll get a briefing on the humanitarian efforts. He'll meet with some members of the 82nd Airborne. Yesterday, he was asked whether or not that visit so close to the front would change his policy attitude, and he said he's been to plenty of these regions in his lifetime. So it's hard to imagine we'll get movement on the kinds of things you'd like to see militarily.
No, but they continue. True. But they continually talk about how Putin is feeling more cornered. There is a great quote that was about when he destroyed Grozny, where he said, look, if you look weak, then you are weak. And so I think that you're going to see Putin come out with some statements that make it clear that he is not a weak person. They also have, I mean, there are a lot of, if you notice, they're really winning in the eastern part of Ukraine. They're taking ground.
There is some reporting today suggesting they've established essentially a land bridge between Donetsk and Crimea, for example, which would be strategically make some sense. On the other hand, I mean, a lot of reporting that suggests, at least east of Kyiv, the Ukrainian resistance has pushed back some forces.
Yeah, that's where, if I were Putin, which I'm not, because I'm not, I run mad money, but I'm not a mad man. Putin, I think, has to do something radical to make everyone realize that he is going to do, that he's in charge. But it would not be nuke; it would be leveling. I mean, when he took over the war in Chechnya, he said basically we have to start leveling cities. We can't have resistance. And the way to not have resistance is to take the city out. Now, he's a big enthusiast for what the Great Patriotic War, World War II, and how Stalingrad was destroyed by the Germans, and yet they still were able to have guerrillas, basically, from the other side who came over. Khrushchev led that. And what I think is going to happen is that, I hope this doesn't happen, but I think his playbook is to level a city. And they have so much artillery, they can do it.
Right. That's one reason why Zelensky's been asking for more. By the way, Jake Sullivan also on the tape today saying that the U.S. and NATO are doing contingency planning for the possibility that they choose to strike a NATO territory.
Right. I think what they should really be doing is trying to give them enough the Patriot missile is very expensive, but, Raytheon is fantastic technology. And they should be calling Greg Hughes. They should call, just say, look, what do you got? What do you got for us? They are not being, remember, the Pentagon somehow is not running the show. The show's being run by the national security. And the Pentagon's ready. The Pentagon's ready. And again, I hate to keep using this word, but they got to focus. I mean, we got the wrong guys running the show. We've got the wrong weapons. We're not using what AeroVironment has. When I checked out we had an AeroVironment's arsenal on our set. I mean, it's much scarier than what we're using. We're giving them the pocket stuff, stuff that's in their back.
Telegraphing a pivot to the Pentagon would also send signals to the likes of China, where we're on a diplomatic tightrope right now, Jim.
Well, I think Greg Hayes, when you talk to Greg, he would say, look, if you give people, this is Raytheon, if you give them the latest technology, it's not a tightrope. It's just a lesson to be able to keep it so that their data hospitals aren't crushed and schools aren't crushed. And, I don't think poking the bear is what's happening. I think that the bear, Russia, is destroying life as we know it in major cities and getting away with it because we're so worried about nukes. And I thought the president made some points yesterday that made it seem like, listen, we're not afraid. But, everyone's sitting back. The world is sitting back, and half the children have left, and watching a travesty of missiles going into schools and hospitals and just saying, you know what, let's not poke Putin. I mean, so what, he gets away with it?
Well, they're the most isolated country in the world. It's hard to say that we're letting anyone get away with anything.
Well, but it's financial. I just think that you need to get, you're absolutely right. I'm just saying Ukraine needs to be able to fight back. No, I'm not talking about what the now infamous tweet that we got from Lloyd Blankfein about why don't they do a Doolittle raid and strike part of Russia.
Sure.
I'm just saying that they're getting second-rate. They're getting very second-rate military munitions, and they need first-rate. And that's why they should call Raytheon. We should get Raytheon right now. Get Greg Hayes on the phone and say, okay, listen, give him the latest. Give him the truck with the laser that shoots down the missiles, which sounds like it's sci-fi, except for they haven't.
Speaking of all of this, that's a live shot of Poland, where the president has arrived after meeting with European and G7 and NATO allies. Our Kayla Tausche is in Brussels with the latest and what we might expect today. Good morning again, Kayla.
Good morning, Carl. President Biden is heading to Rzeszów, Poland, where he is going to be meeting with troops. He's going to be meeting with refugees tomorrow. He's going to be giving a major address and also having a bilateral meeting with Poland's president. The city of Rzeszów is about an hour from the Ukrainian border. It's a major conduit for a lot of the weaponry and equipment that is being delivered to Ukraine. It's a resupply passageway for the forces there. On Air Force One just a few moments ago, as you mentioned, Jake Sullivan, the national security advisor, said NATO allies are in over how to respond should Russia use weapons of mass destruction, but he described it only as a severe price that Russia would pay without going any further. He did say that U.S. and allies continue negotiations to send anti-ship and anti-air equipment to Ukraine, but it's unclear how soon that equipment could be delivered. He did say that he didn't want to elaborate further on those discussions for fear of destroying some of the efficiency of getting those tools to the Ukrainians. He also said that so far the U.S. still does not see any evidence that China has decided to pursue material support of Russia's efforts. effort. That's intelligence that supports the comments that we got from Treasury Secretary Janet Yellen earlier this morning, where she said she does not think it's appropriate to sanction China right now because of any sort of alignment or perceived alignment that it has with Russia and its efforts in Ukraine. You guys have been talking about that energy deal. I want to share a few of the details about that. 15 billion cubic meters is what Europe says it will be offsetting with new supplies from the U.S. and from other partners. But a senior administration official would not elaborate what portion of that is actually going to be coming from U.S. producers, although they did acknowledge that production would need to go up to satisfy some of those requirements, not just this year, but also the commitment of 50 billion cubic meters by 2030. President Biden, when he announced that deal with the president of the European Commission, he said the goal is not just to reduce dependency on Russian natural gas, it's to end dependency on natural gas, period. An acknowledgement that a move like this that ramps up production is in direct conflict with the other climate initiatives of his administration. But certainly they're in between a rock and a hard place right now. And Jake Sullivan saying that a major discussion at the G7 yesterday was how to lower energy prices around the world, possibly another strategic reserve release in a coordinated fashion, guys.
Okay, so Kayla, any chance at all that the MiG-29 issue comes up again with the fighter jets? Because I know the president feels that would provoke Russia, but many Air Force people that I speak to and many people at the Pentagon say, look, only the MiG-29s could take out the artillery that is killing innocents in the major cities.
It's likely to come up, Jim, but Jake Sullivan just said that the U.S. position has not fundamentally changed on that front, and that there also haven't been any negotiations with Poland since the situation a couple weeks ago, where Poland preemptively, according to the administration, announced that it was going to be delivering those MiG-29s to the U.S. Air Force Base for delivery to Ukraine. The U.S. saw that as a provocation to Russia. It didn't want to go there, and if the position hasn't fundamentally changed, according to Sullivan, it's hard to see how they could go forward with it.
Okay, thank you, Kayla.
Yeah.
Thank you very much.
Kayla, appreciate your reporting this week. Very, very
Great job.
Instructive. Kayla Tausche in Brussels. When we come back, a closer look at the Apple rally. Stocks aiming to extend its win streak to 9 today. We'll get to all the other names we've not yet touched on, including Disney, Bed Bath, Boeing, see what's going on with cannabis, Tesla, and more. We're back in a minute. Can Apple make it 9 days in a row of gains? It's lower in the pre-market. The shares are up, though, more than 15% since the rally began. Meantime, the EU Parliament and some member states reaching this deal on the Digital Markets Act. It's a set of regulatory rules aimed at curbing the market power of big tech. Jim, is this material?
It's the usual shakedown that we get from Europe every couple of years. They must be, some of the budgets down there must be, they need money. Because that's what it is, write checks.
Like speeding tickets at the end of the month?
Right. Yes, it is. It's like write checks and parking tickets, speed, whatever you want to call it. I felt it had no teeth whatsoever. Nor do I care that much about the Apple, about the Epic lawsuit, which I think was on very thin ice against Apple. What I do care about is that Apple is talking about something I begged them to do.
Hardware.
A subscription. Now, every time I speak with Tim Cook, who's the CEO, and Luca Maestri, who's this unbelievable CFO, I suggest subscription lifetime. And like when I used to try, please break out the service revenue. No. They finally said, well, it's bigger than revenue. I said, will you please break it out? We need a multiple. Like the Eagles. We need a better multiple. Like Duke. It's like Duke. He and Eddie go to those games. Well, the last 7 times I've said, if you can give us a subscription model so we do lifetime, we've got something big. And I'm persistent. They're good. I think they're coming around to commonsensical view.
Maybe. I mean, I was just thinking the spring quarter, for example, is traditionally where they talk about capital returns and balance sheet. Maybe this could be folded into that.
Well, I like it. I mean, look, I get, I don't know, 5 or 6 bills that come between 3:30 and 4 a.m. from Apple. And I would like, if they offered me something that included Apple Plus and this and that and backup and everything, and if I act now, it's certainly not the way Apple does it, but also the credit card, I would do it. And I think tens of millions of people would do it. They got to be a little more creative and realize that the bundle is a little difficult. Let's get an actual deal where remember, they have no default rate. That's what Luca told me, no default rate. Where we just, because I would find there'd be more things I would take from Apple. Apple would make money off a lot of people because they would say, well, look, you do this, you get this, and there'd be a lot of people who say, oh, I want that. Particularly Apple Plus was just starting to do some things that people are talking about.
Right. How about the notion written about yesterday that they might follow suit or arrange similar deals the way Spotify has with Google?
Well, that would be bad for gross margins. I mean, the Spotify, Google, I thought you buy Alphabet off that because Alphabet is saying, listen, we can give away that. Their gross margins are pretty good. They make a lot of money. But what mattered to me the most today in terms of gross margin, we saw an Amazon breakup play. I haven't seen one of those in a long time. That said if you broke up Amazon, you basically would get the retailer for free. And I always love these and say, well, like, no one's going to break up Amazon. It's like, when I love the Goldman Sachs guys, look, if you broke it up or if you closed it with a book value, we'd be worth X. It's like, well, I don't think you're breaking up and I don't think you're closing it. So, I mean, that's kind of a supposition. I mean kind of asterisk.
More theoretical than practical.
Look, if we got Tyreek Hill and if we got Russell Wilson, I mean, the Eagles would be killer. I mean, no, you see, that's not going to happen.
Can you afford Tyreek right now? I don't know.
No, but
point,
I did have an interesting discussion with Mr. Lurie yesterday where I didn't know it was Mr. Lurie. And someone said, what are you going to do with what do you think we'll do with the 3 picks? And I said, we're trading them. I know. He goes, you sure? We're trading them. And he said, well, this is Jeffrey Lurie. We're not doing that. I said, oh, my. I'm sorry, Mr. Lurie. I mean,
pretty exciting time
fabulous.
of the year.
Look, I've got to tell you, when you have the owners' meetings, talk about what I want to go to. I mean, I know I'll probably have to buy a team to go. Colorado's for sale. But the owners' meetings, those are the kings getting together. And the people, I mean, like Tepper is the richest owner of Carolina. But when they get together, it's just the Titans carving up. It's like World War I.
It's Mount Olympus to a large degree. Yeah.
Yes, Zeus. Prometheus. Jeff Lurie is Prometheus. He's about to be unbound in a division that's the word that actually took a step back, if you can imagine. The Commandos with Wentz, they're going commando, right? Didn't they go commando?
Yeah. We'll talk more about the correlation between sports and sports business is pretty hot right now. Maybe we can get to that. We'll get Kramer's Mad Dash. We'll count down to the opening bell, which is happening in just about 6 minutes. Don't go away.